Hello, everybody. I am Dr. Richard Smith, Executive Chairman of the Foundation for the Study of Cycles, and this is the first episode of Trading Market Cycles. So thank you so much for joining me today. Thank you so much for joining the FSC. We are a not-for-profit 501c3. We give out a lot of free information. I hope that today's information will be valuable to you and continue the great tradition started by our own Lars von Tienen here on Cycles TV, who gives out amazing information every week. So love to hear from you. Just give me a little shout out if you're here. Tell me where you're from. It's important to me that we really connect during this time and that I'm here for you and I'm not just a talking head, but we're engaged. So with that, I'm going to go ahead and get started. So excuse me and please, forgive me while I learn the platform here and do this for the first time. So let's get going. All right, let me just make some adjustments here. Get the slideshow started. And let's see, one more try. Where am I? I promise I will get this going here the right way. All right, I'm just going to jump over here and start the slideshow. And Dan, if I am messing anything up, please correct it. So the title of this series is Trading Market Cycles, and I put the 3 periods in there because they really are 3 separate things. Trading is one thing, markets are another thing, and cycles are another thing. And today is June 11th, 2024. So disclaimers, caveats, and notes. I want to go through this because I think this is important. And it's important for me to say it to you and for you to hear it. This content is exclusively educational for the purpose of better understanding cycles and markets. That's what we're doing here. We're an educational 501c3. This is not professional investing advice. Your situation is utterly and completely unique. I do not know you. I don't know your situation. Everybody's situation is different. This is really one of the most important things about the world we live in. Everyone's situation is unique, and I can't give advice that is tailored to you. You really should consult with experienced advisors. I don't know that it necessarily have to be professional. Maybe you can learn from books. But again, your situation is unique, and there's a very high degree of risk involved in trading securities. Buying or selling decisions are solely your own. This information is being given away for free, so keep that in mind. And lastly, most people that trade lose money. So I have to talk about this a little bit because it's important to understand, and it's important to me to understand what you can expect to get from these sessions and what you should not expect to get, okay? So my overview just for today and for the show in general, what we'll be covering is mostly identifying shorter term cycle setups using intraday data. So I'm sure that's of interest to this audience, and look forward to working through that with you. In general, I'm looking for the best setup that I can find in a given week, and I plan to share that with you. And today, this week, the setup is Bitcoin. And it's setting up as we speak. So very interesting things going on in the markets right now. So why this show? Again, we're an educational 501c3 and we're growing, and we want to continue to grow and reach a wider audience. So expanding our coverage. I am personally inspired by Edward Dewey's insights and his courage. So something I want to talk about more as the show develops and we get more time together. Edward Dewey, the founder, that's why we're here. This is the Foundation for the Study of Cycles. He started it, ran it for 40 years, And he was an amazing man who doesn't get enough credit. And he was a very courageous and brave man who really sacrificed a tremendous amount to pursue and develop a new science, the science of cycles. It's not completely developed yet. There's a lot of different theories about cycles, but it was what he set out to do, and it is why we're here today. And it's why I'm continuing to develop his work and offer this. I want to learn with you. Give and you shall receive, and production is better than consumption. I've been consuming a lot. I've been learning a lot. It's time to get some out there. We're here to study cycles. And why now? Because I've been trading these cycles for over a year now, and I'm confident that what I have to share has value. Where have I been for the past year? I've been trading. I wanted to put my tools to the test, my cycles tools, my other approaches, really develop my full systematic approach, my risk management, and it's going well. So, I had to prove to myself that this really works, and that's why I'm ready to share more with you. All right, let's talk about trading, but excuse me for 1 minute while I make an adjustment here. Sorry about that, because I would need to see what you guys are saying, if you're saying anything. So let me go back here now. All right. Not ideal, but we'll work on that later. Let's talk about trading for a minute. And I just got to cover the bad news first. Remind us that most people that trade lose money. This is a website from a broker in the UK where they actually require their brokers to put this information on their websites. I'm just highlighting it here and calling it out. CFDs are kind of like futures or options. 76% of retail investor accounts lose money when trading CFDs. In other words, highly leveraged instruments with this provider, okay? 76%. That's not the worst of it. There was a paper out in 2019, 2020, day trading for a living. And if we look down here, I think I can get a laser pointer going here. All right. We show that it's virtually impossible for individuals to day trade for a living, contrary to what course providers claim. We observe all individuals who began to day trade between 2013 and 2015 in the Brazilian equity futures markets, the third in terms of volume in the world. We find that 97% of all individuals who persisted for more than 300 days lost money. Only 1.1% earned more than the Brazilian minimum wage, and only 0.5% earned more than the initial salary of a bank teller, all with great risk. So we got to keep this in mind. I am here mostly so that you don't lose money and you don't get misguided with cycles, that you get good setups with cycles. You learn how cycles work in a comprehensive trading system, because I don't want you to lose money. I want you to make money, but the biggest thing is I don't want you to lose money. All right, and then one other paper here recently came out in 2023 on finfluencers, and you got to know this, right? We're out there listening to people online. Tweet level data from social media platform reveals low average accuracy and high dispersion in the quality of advice by financial influencers or finfluencers. 28% are skilled, generating above average monthly returns, but 56% of the finfluencers out there have negative skill, generating minus 2.3% monthly abnormal returns. And finally, the highlight here, anti-skilled finfluencers have more followers and more influence on retail trading than skilled finfluencers, okay? So if you have more followers, it probably means you've got anti-skill. If you have a lot of followers, the advice by anti-skilled finfluencers creates overly optimistic beliefs most times and persistent swings in followers' beliefs. So that's what I'm here to make sure doesn't happen. I don't want you to have overly optimistic beliefs. That's the big challenge. We have to be realistic. We have to learn. We have to take time. We have to get experience. That's how you get good at this. That's how you make money in the markets. All right. So caveat emptor. Let me just check here and make sure everything's tracking and things are going as hoped. So looking at the comments. All right. Good. All right. Looks like we're tracking, and bear with me for just a little bit while I, do this the first time. This is the first time I'm doing this show. We'll get into a rhythm of going over trades, learning about cycles, setups, etc. But I do need to cover a few things, and I hope you're okay bearing with me. I do have a great trade for you at the end of this, a great setup, I should say, at the end of this session. So bear with me. All right, let's talk about trading. Hopefully you've heard me talk before, but loss aversion is our biggest enemy, right? What is loss aversion? We hate to lose. And the fact that we hate to lose has different consequences depending on if we're losing on a position or winning on a position. So when we're losing, the fact that we hate to lose makes us not want to sell, because losing equals sell, right? But when we're winning, our fear of loss attaches itself to our profits, and it makes us want to sell because we don't want to lose those profits. So when we're losing, right, we're risk seeking. We're taking more risk because we don't want to lose. But when we're winning, we're risk averse. We tighten up, we pull back. So we have to reverse that. That is the essence of trading over my experience of the past 20 years and the hundreds of thousands of people I've worked with. Personally, I'm looking for big moves that defy logic. I want market irrationality working for me, not against me. So in my own trading, I use trend, cycles, including seasonality, and sentiment across multiple time frames and across diverse asset classes. So we'll talk about that. Not all today. I can't unpack everything today, but I want to give you a general idea of my approach, what I'm doing, and what I'm going to be covering on the show. I do trade futures, but this can also be done with ETFs too. In general, I'm just focused on asset classes, be it equities, treasuries, commodities, etc. I track my exposure levels. I'm not going to get into this today, but I will get into this over the course of our time together to make sure that I'm in my behavioral sweet spot, that I have enough exposure, but not too much that I'm going to really get kind of knocked off. I trade 2-hour bars because I typically hold positions for 1 to 2 weeks. And I think this is really important. If I could say to, novice traders, beginner traders, the one thing that is really critical to do is to make sure you're trading in the right time frame for you. So I can't do intraday, trading minute by minute or even like hour by hour because I can't sit at my desk all day long. So I had to go to 2-hour bars and typically hold my positions for 1 to 2 weeks. I believe that trade risk and portfolio management are more important than buy and sell signals. So we're going to be covering buy and sell signals here, but that's really the smallest part of trading success. And Jack Schwager famously said on Risk Management Market Wizards, they're all pretty religious about risk management. All the market wizards trade totally differently, have totally different systems. That's my experience too. If you're a good trader, it's because you've worked hard to develop a system that works for you. You've gotten it down to a few variables, not too many, and you have good risk management. They were all pretty religious about risk management. And Ken Grant's author of Trading Risk, 11th Commandment, take more risk when you are up and less when you are down. So again, that's the loss aversion thing, right? We take more risk when we're down and less when we're up. How do we take more risk when we're up and less when we're down? Okay. If we can learn that, I promise you, you will have a totally different experience in the markets, and you'll be putting yourself in the minority of traders because most people are doing the opposite. And when you put yourself in the minority, you've got a better chance of winning. All right, let's talk about my belief in markets. Y'all good here? Somebody's asking about Fibonacci. I'm not covering Fibonacci right now. We can talk about it as this evolves, but not talking about that yet. All right, markets. The way I see it, markets are mostly a game today. The more digital they become, the more game-like they are. Digital equals game. I can talk about that more later. That's how I see it. Markets today are only loosely tethered to any kind of underlying reality, quote unquote, particularly on shorter term horizons, which is what we're talking about here. Markets transfer wealth from the undisciplined to the disciplined. Okay, markets reward discipline. And we're here to be disciplined. And markets are dominated by insiders and institutions. Let's not kid ourselves about that. Although, as small investors and traders, we do have advantages. All right, cycles. Just high level, my belief on cycles. Human beings, we are dominated by cycles, okay? We have sleep cycles, we have breath cycles, we have hormonal cycles, our cells have cycles. You name it, cycles are going on in us and in the entire biosphere, right? There's nothing that's alive that is not experiencing, undergoing cycles. So why wouldn't cycles in markets mostly be driven by the collective behaviors of human beings? Okay, that's how I see it. Some cycles are connected to external forces. I think that's true. Hope to explore that a bit as we progress. And I do cycle detection through digital signal processing, statistical validation, and visual confirmation. And I think that's very important. So I look at cycles. I use my own judgment, my own discretion, my own experience. I use the computer to get me in the ballpark, but the final decisions are mine. And that visual confirmation is important as well. I don't think that machines are ever going to be, the greatest traders in the world. There wouldn't be paying traders at hedge funds, et cetera, vast sums if machines could do it. And finally, we don't fully understand cycles yet. So we are here to study cycles. This is the foundation for the study of cycles, right? We don't understand cycles yet. And part of doing this together is exploring this together and starting to better understand cycles. All right, so with that preamble, let me just check in here. Lose money to learn to make it. That's right. Swell chaser. I always say I'm thankful I started out with trading when I didn't have much money. So that was a help because I lost my money a few times, but it wasn't very much. So it's absolutely true. All right, any questions so far? Large funds always on wrong side, wrong time. Could be. All right. The slides are in a small screen. I hope that the everything looks okay to you. Let's see here. Maybe I can make an adjustment here. Is that better, Andrea? That's probably better, right? All right. So let's talk about Bitcoin. First, I'm going to talk about the longer term setup, what I see going on, whether I'm broadly bullish or bearish on Bitcoin. And then we're going to get into the short-term cycles. So this is the analysis that Lars shared yesterday when Lars and I did the Cycles TV session together. I find his analysis very compelling. Absolutely love Lars and his work. So proud to have him involved with the foundation and grateful for all the technology that he's developed and contributed to the FSC. We would not be here today as we are if it were not in part for Lars and the amazing work that he's done. And he does some amazing analysis work too. So his long-term analysis in Bitcoin shows this kind of 3 waves down, 5 waves up behavior. And the latest cycle top was in late 2021 there. And then following that top, we had 3 waves down, right? The 1, 2, and 3. And now broadly, we are in the 5-wave up cycle with, the first wave up, 1, wave 2 with a little bit of right translation, currently wave 3. And we still have 4 and 5 to go. Doesn't mean we can't have a significant correction, but this final 5th cycle, nominal 200-day cycle, this is about 191 days, hits around June 2025, and that lines up with a lot of the broader kind of tops in the stock market and real estate, etc. Cyclical projected tops. So that's part of my overall bullish thesis. The Bitcoin halving. So after each Bitcoin halving, hopefully you know what that is. About 6 weeks later, we tend to have a good run in Bitcoin. Is it going to happen again? Not guaranteed, but here was the 2012 halving. We had a good run. You can see here, these are weekly bars. So about 6 weeks, later tended to start the rally. The July 16th halving, or July 2016, May 2020, again, some flat period and then a good rally. And this was April of 24 when the last halving was. We're about 6 weeks past that now, and we'll see. But I think overall, this is broadly bullish for Bitcoin. The Bitcoin macro picture. So this is a picture of the Federal Reserve. I think uncertainty around inflation and the Federal Reserve and politics are going to continue to undermine confidence in the US dollar and in institutions in general. And I think that as long as that's playing out, Bitcoin definitely has some macro tailwinds. All right, now let's get into cycles here. So weekly Bitcoin cycles. This is on the spot. BTC USD. You can see here, this is BTC USD weekly using the Yahoo Finance data. And there are 3 cycles, the 176, the 89, and the 40. 1, 2, and 3. So I just picked the 3 cycles that were picked by the AI analyzer, okay? Overall, weekly spot cycles in Bitcoin are bearish. We're not seeing a big drop in momentum yet, but we definitely have a negative momentum divergence. Weekly cycles don't come that into play when I am trading on 2-hour cycles, but I still want to know what's happening in the big macro picture. So, everything's a mix. Nothing's perfect. But I think the weekly cycles overall are a little bearish on Bitcoin, especially the spot. The daily cycles on Bitcoin, again, this is spot, just BTC USD. Okay. We just take cycles 1, 2, and 3. Looks like we're bottoming here. Okay, so we could get a little bullishness here from the daily cycles. Also on our cyclic RSI indicator, we've got a positive divergence. Okay, again, this is spot. One thing that's just interesting to me here that I wanted to point out briefly, these are the daily cycles and these are the weekly cycles. But look, you've got this 176, 40, and 89 on the weeklies. And then 179, you've got a 40 here, 38 that I didn't use, and 85 on the dailies. So here's this kind of fractal phenomena from the weekly to the daily cycles. Why would it still be like 180 and 85 on the dailies and 176 and 89 on the weeklies? Maybe it's just a coincidence. I don't know, but I see that a lot. Same kind of length cycles over different time periods. Interesting when it comes to the study of cycles. All right. Moving on, still looking at the big picture. Are we broadly bullish or broadly bearish on Bitcoin? This is Bitcoin seasonality, and I'm sharing with you all the different inputs that I use for my own trading. I look at seasonality. I developed seasonaltrader.com for Jake Bernstein 20 plus years ago. I still look at seasonality today. We are in the month of June right here, month 6. And we can see that overall in June, the gains have, we do have gains on average, but they're a lot smaller than October and February here, where we have some of our biggest gains. So seasonality is not a big influence in Bitcoin in June. Last big picture thing here is sentiment. And this is just the price of Bitcoin here, okay? And down here, this is the position of the commercial traders in the market using the commitment of traders data. And we can see that currently commercials are long Bitcoin, but not as long as they have been in times past. So I think this is kind of neutral sentiment-wise from the institutions. Most likely the whole, the ETF companies who are buying Bitcoin, kind of neutral. And then we can look at the small trader sentiment also. And we can see here that this is Jake Bernstein's daily sentiment index on Bitcoin. And right now, small traders are neutral, not as bullish as they were up here back in March of 2024, which when small traders are extremely bullish, that's a bearish indication. All right, Lars is trying to talk to me. Let me see. Okay, we're good, Lars. All right, so I think that's it broadly for the big picture setup before we get into the short-term cycle. So summarizing, Lars's long-term analysis trends bullish. The Bitcoin halving is bullish. Macro tailwinds for Bitcoin, in my mind, are bullish. Weekly spot cycles, bearish. Daily spot cycles turning bullish. Seasonality is slightly bullish. Sentiment is neutral for commercials and small traders. So that's the big picture setup as I see it in Bitcoin. Any questions so far? My picture in the lower right corner is blocking some data in the chart. Okay, let's try that setup. No, I think we'll stick with that one, and I'll try to make sure it's not blocking something or move my picture if I need to. Okay, so far we've talked about my philosophy on trading, markets, cycles. We've talked about the big picture in Bitcoin. Now let's get into the short-term cycles in Bitcoin, and I think you'll find this very interesting. Intraday cycles in futures. Okay, so this is the daily Bitcoin futures cycles. Okay, we looked at the spot cycles so far on the dailies. They were turning bullish. This is the futures. The futures are a little different than the spot. They only trade 5 days a week, for example, not 7 days a week. I only trade 5 days a week. I don't really want to know what Bitcoin's doing over the weekend because I don't want to be focused on markets over the weekend. So I like to look at the futures data. And, there's a couple of strong cycles. The 192 here is the strongest cycle. I think that's this cycle right here. Okay, and then there's this 66-day cycle, which is a third of the of 192 roughly. So it's a harmonic of the 192, and it's got a strong Bartels at 92.31. So overall, the daily cycles in the Bitcoin futures are a bit bearish, and we saw this on the daily. Well, this was on the weekly, but we've got a negative divergence in the cyclic RSI here, right? We got a high in price, almost about the same high here, but our momentum is down on the daily chart. So that is something to be attentive to. Now, here are the 2-hour, the cycles in Bitcoin on the 2-hour chart. So the first thing I want to draw your attention to is this really beautiful cycle. This is the 109. Sometimes it varies, 107, 108, but 109 2-bar period. So that's about 218 hours. Futures markets are open about 100 plus 110 hours a week. No, 120 hours. Let's see, 23 hours a day, 5 days a week, 115 hours. So 2 hours, 109 hours, that's about 2 weeks of data. So every top and bottom of these cycles is about 1 week, okay? So 1 week from bottom to top, 1 week from top to bottom. So about a 2-week cycle. And we have this really strong cycle in the spectrum. And right now, where are we? This was as of about an hour ago, okay? We are coming into a bottom. And this is out of sample data right here, okay? So this cycle was forecast yesterday. And since that forecast, it's been coming down into the bottom just beautifully. We have we don't have good upward momentum yet on the 2-hour chart. So the setup right now has not been triggered by momentum, but we are coming down into this very strong cycle that really sticks out on the spectrum, right? Very dramatically, totally separate from other cycles around it, and has been working really well. And you can just look at it visually, you know, top, bottom, top, bottom, top, bottom, top, bottom, top, bottom, top, bottom, top, bottom. I think it's a good chance. So very happy to share with you this great example of a cycle. Let me actually jump over to the live charting here. Okay, so we are in the cycles analyzer here. Hopefully I'm not blocking anything, but this is the same chart we were just looking at a slide of, but I added in a couple extra cycles. So let me take this off, right? Here we are right now. We've actually had another bar down. So, and we're right about at support here, right? So coming into support, into a cycle low, pretty interesting. The other cycles, there's a 306 here, right? Which is 3 times roughly the 109. Also, when we add those two together, we're bottoming. Could consider this 194 as kind of like a 1, 2, 3, 100, 200, 300. Even if we add that in, we're still bottoming. So we haven't really gotten an upturn in momentum yet, but I do think that coming into this bottom, we should be very attentive. And given the persistence of this cycle, okay, it's been around. I've been tracking it for months now. It's not just coming in and out of existence. That's one of the things I do when I'm doing cycles analysis is I want to see a cycle that has persisted, you know, across different numbers of bars, different start points, anchoring off different tops and bottoms, etc. And this one has been very reliable, and it's setting up beautifully this week. So now then, if I want to look at maybe getting a little jump on this opportunity, I would go down to a lower time frame, in this case, the 20-minute time frame. So let me just go back to my presentation here for a minute. We're going from the 2-hour to the 20-minute. So this was the 20-minute forecast from back a couple days ago. And I just want you to see, one, there's these 2 really clear cycles here, the 122 right here, and also the 240 right here. And by the way, these happen to be harmonics of each other, right? 1 and 2. And look at how this out of sample worked, right? Came into the low into the high, coming into a low. Pretty interesting, isn't it? And we've got a little turn up in the cyclic RSI right here. So we've got very strong cycles in a harmonic relationship. And we've got a turn up in the cyclic RSI. So interesting setup. All right, let's go now to updating the out of sample data to the live data. And it shows that we're even, closer to a bottom here. So we've got the 20-minute indicating actually a buy trigger right now with the cyclic RSI here. Let's go back to the live chart and make sure we haven't missed any data points. Everybody tracking here? Okay. Bitcoin and Ethereum are getting destroyed. Let's see here. Bring the latest data up. Yeah, that is, yeah. So we've kind of broken below support here right now, although I wouldn't say dramatically. Look, in my experience, short-term trading, this is oftentimes what you are faced with, right? Coming into a cycle bottom, the cycles are by definition counter trend, right? So yeah, this is a downward trend. You've got a little buy trigger and momentum here. You have to be careful of this falling knife, but at the same time, this is the setup. And overall, we still see a lot of bullishness in the kind of full spectrum of where we're at with Bitcoin. So these are the kinds of setups that I've been looking for and trading. There's a lot more about how I go about creating a portfolio of trades and how I make sure that, yeah, look, this is a potential falling knife situation and we're looking at a bullish setup. It's hard, right? It feels hard to do, but these are the times, when you have a good trade, it's going to feel hard, because if it doesn't feel hard, it's the same way everybody else is feeling. That does not mean back up the truck. You've got to make sure you've got the right position size for you. You got to make sure that you can live with the whatever losses you think you might be subject to. But overall, this is a phenomenal setup. We've got the 2 out. We've got really strong cycles. This is as good as the cycle setup gets for short-term cycles, right? Coming into a bottom on a very clear, distinct cycle that's been around for a long time on the 2-hour, and a clear bottom with a momentum upturn on the lower time frame chart, the 20-minute, with the with 2 harmonic cycles, 121. Now it's 251. Take out this 90. That 251 has a 97, 98 Bartels, and the 121 has an 83. So that's the picture for today, an introduction to how I do trading overall and the cycles that I'm seeing in Bitcoin on an intraday level and how I relate that to the bigger picture of Bitcoin, because I want as many of my ducks in a row as possible. I don't ask for perfection, but overall, try to get as many things aligned as possible and then look for the setups, right? And as we continue, we can get more into talking about position size, exposure, diversification. All those things matter. But today I wanted to make an introduction and show how I look for setups, share with you what I think is a compelling opportunity, and take it from there. So that's what I got for today. Let me see if we've got questions. And let me jump back to the setup here. All right. Excess power. Yes. Meanwhile, Bitcoin and Ethereum are getting destroyed. Great, isn't it? That's often what happens at turning points. I see in the markets a lot right now, this kind of just moving past support and resistance to the point where everybody's like, oh, forget it. That's broken out or broken down and it's gotten away from me. And then you see these reversals. And that would be my bet right at this moment in time. Where can we get this live data source, Trading Queen? So I use TradingView for my intraday data right now, together with the cycles stream that is available as our Analyst Pro service. So, and if you are a subscriber to the Analyst Pro service, you can do the intraday cycles analysis and you can hook it up to your TradingView streams. We have some videos to help you do that. If I jump back just to share my screen one more time here, let's see, let's go here. Sorry about the, this is telling you on the 2 hour, this is like a 2-week trade, right? So the top here is the 16th of June. So when is that? That's basically next Monday, right? Because you got a couple of weekend days in here. So it's about a week-long trade. And I'd say the winds, the winds are up. All right, let me go back now. Sorry about that. Get the hang of this soon. All right, let's see. Does a higher swing of the purple line, Dan D, does a higher swing of the purple line imply a higher increase of the price? No. Good question. Comes up in cycles analysis all the time. The amplitude of the cycle, in other words, the height or the depth, is not an indication of price target. It's not even necessarily an indication of momentum. So that's one of the things that can be very, remember what we talked about in the beginning about overly optimistic beliefs. So amplitude can definitely kind of seduce you into an overly optimistic belief, right? You look at it right now, you go, "Ooh, that's a perfect setup. Look at how high that purple line goes." But you can't do that in cycles analysis. We're looking for turn points. We're trying to get ahead of trend changes. And there are other tools that we can explore. Somebody mentioned Fibonacci earlier. That's one tool. FLDs, forward line of demarcation, that Peter Eliades is really the master of. But we've integrated into our cycles analyzer. We can talk about that more as our time together unfolds. So great question. And no, the answer is no. Another good trading vehicle is BITO. Yep, you don't have to trade futures. You can trade the ETFs now. DR, any thoughts you use for counter trend entries? Well, in general, DR, I try to stay with trend. So yes, the trend is down now on a 2-hour chart, but the trend is still up on a daily chart. And so I'm looking for kind of counter trend moves at lower time frames that align with trends on a higher time frame. Okay, so I didn't actually cover the daily trend in my presentation today, but we've been tracking a 50-day moving average, and Bitcoin is above that. Not on an intraday basis today, maybe, but we'll see by the end of today. It was above it this morning, so the daily trend is still positive. Which is a big thing that I look at, especially when trying to get a counter trend move on a lower time frame. So I'm looking for moves that align with the larger term trend, the higher time frame trend, but that are kind of cyclically going against the trend. So I'm looking to how to get back on the trend with the shorter term time frames. And that's what I believe we have in Bitcoin right now. The daily trend is up. I think overall Bitcoin is bullish. We'll see. But so when I see a kind of shorter term cycle bottoming with momentum starting to point up, that's an opportunity for me to kind of get back onto the higher term trend. So thanks for that question, DR. Let's see. Thanks everyone for your great support. Really appreciate it. Cycles are the missing link. I agree. Part of the picture. I don't want anybody to believe that cycles are holy grails. We haven't figured that out. I haven't seen it. I've been using cycles for well over a decade now. I mean, there's people who've been doing it longer than me, but I've done it a lot. And they aren't the only thing I use, but they are an edge for me. And I think the technology that we have to do the cycles detection is very compelling now, very advanced. If Dewey could only see what we can see today. Let's see, any other closing questions? Where would you put your stop? You know, it's a good question. So I did talk about stops today. I know it is something important, but if I were putting on the trade right now, I would be putting my stop probably about, the low here, 66.5, maybe 65.5. Again, that's my position size, right? I'm doing a short-term trade, trying to get in a little early, jumping the gun a little bit. So I want a tight stop. I might get stopped out a couple of times before I actually get the trend. So again, stops are part of your unique situation. I think, we're kind of at support. We've broken below support. We're going back above now. That's exactly the kind of setup that I like to see. But again, it's scary and can be a little dangerous. No doubt about it. Let's see. How are we doing here on time? I think we got a few more minutes. Can you help me to understand, Anise? How are you using the different timeframes in making your buy or sell decisions? So I think I talked about that a little bit, Anise, from DR's question. Primarily, I'm like looking at the trend and oftentimes the cycles at the higher time frame, like the daily time frame here. And then I'm trading a 2-hour bar because that gives me about a week long in my positions. And I'm interested in this Bitcoin because it's a perfect setup. And it is an opportunity to, yes, it's a counter trend move now against the daily trend, but it's an opportunity to get back in alignment with the daily trend. So how do we kind of take a correction against the trend and look for an opportunity to get back on that trend? Happened with natural gas last week. That was another one, right? So that's the way I use the timeframes. All right, do I look at order flow and price action for exact timing? I'm not sure what order flow is, what you mean there, but I can get back to that. Excuse me if my dog barks here momentarily. All right, so anything else? Complimentary to Lars's sessions. Thanks, Dan. I hope it will be. We'll see. I think Lars and I make a good team, and I am interested in what Lars is doing, and I would like to kind of follow up on Lars's longer term vision and see if I can add some intraday spice there. Attila, is there any way to have strength ratings for the weekly, daily, etc., so that one can compare them with each other to figure? We are working on a new version of the cycles analyzer to mostly for advanced traders, part of the Analyst Pro package, where we will be able to see, different time fractal cycles shown on one chart. So I think that's what you're getting at there. Working on it. Supply and demand, order flow. Yeah, so I do think it's an area of interest. It's not something that I've personally really developed as much. But, it's volume analysis. I do think there's something there. I would love to understand it better. Maybe that's something that you can help bring to the table and help me better understand. And it seems like it should have a lot of relevance. I haven't quite integrated it into my own work yet. All right. Well, going to leave it at there, gang. Try to keep it under an hour each week. But glad to be doing this with you. Hope to see you again next week. and hope you found today's information helpful and valuable. Bring your questions next week. Let's do it again. Thanks, everybody. Bye.